So let's see how we are set up for the week ahead and what to watch. Peter McGuire joining us from XM. Pete, good to see you on a Monday morning as we enter the final week before Christmas, of course, and our heads are still spinning a little from all that central bank action last week. What we should take out from that, and there's one more to come this week with the Bank of Japan.
Good morning, Andrew. Yes, it certainly is spinning, and it's had an effect naturally as far as currencies and what we've seen from mood and sentiment. And the overall consensus is that probably inflation may not be under control, and as the Americas move into recessionary or further recessionary fears into 23, what impact that's going to have globally. And as we go with forward earnings for corporations and the currency wars may persist. And you mentioned crude's come off at $79 a barrel. That's the only good sign, I think, at the moment as far as from a consumer land.
All right, so we, of course, continue to speculate about what central banks are likely to do as we move into 2023. We've heard more Fed commentary too. We heard that on Friday from two or three different speakers. What were your thoughts there? Because they're clearly frustrated that the markets are really not pricing in where that Fed funds rate is likely to end up, in their view.
Well, that's exactly right, Andrew. And, you've got all the different presidents all over America have a different view as far as, Fed chair or Fed members. So all the way from East Coast to West Coast, and everyone's got a different, I think, opinion how their domestic economy is going in their particular state or region. And some are service-based, some are manufacturing. So everyone all come to the same conclusion. Where are we going to be with inflation, and how high do we have to take rates? And that seems to be the common thread that's impacting not only central bankers, but consumers and naturally economies.
Indeed. Well, in fact, this week the focus will be on the Bank of Japan.
Yeah.
We know where those rates have just been so low as they continually try and stimulate the economy. So what are the expectations of what they're going to do this meeting? But I guess also as we look to 2023.
Well, from an inflation standpoint, then it's certainly far less than what we are in other developed countries like Australia and America, and certainly in Europe. So it's a low number when we look at the theme of it. But the other side is they haven't had wage growth. You've also had a very dramatic yen move over the last 12 months, which has been almighty. So from that 125 to 150 and now back at 135, what is it at the moment, 136, you may see further strengthening as far as yen, possibly down to that 132 handle, 133 by the end of the year. So I think that there's upside there for yen. Where it moves as far as BOJ and their talks and consensus, Andrew, was certainly in their central bank members.
All right, more broadly, when you're looking, and we saw that strength re-emerge there for the US dollar at the end of last week. What are your thoughts about what we're seeing with the greenback at the moment? Of course, many speculating that we had since seen the peak of it.
Yeah, well, they may well have. I mean, at 114, 115, that US dollar index, Andrew, and you had euro sitting at 90 or 0.97. You've got it now at 1.0, nearly 1.06. So it's been a dramatic move for all the currencies. And as far as are we going to take that peak out again, I possibly doubt it. I think that for that to move 10%, we'd have to see some very, very, very interesting issues present itself in 2023. So, yeah, I think there's probably further downside for the US dollar index. Maybe that 104, 103 over the January period. Bit hard to forecast out from there because there's a lot of different news items impacting currency markets by the day.
Are you still liking gold at this point, given perhaps where that US dollar is likely to track, given that inverse correlation?
Absolutely, Andrew. I mean, it's at $1,800 an ounce, and it's had a dramatic move up. Also, keep an eye on silver, nearly at $24 an ounce. That's the one to really look at, the little brother, because of the ratio between the two. Silver's far less value, or far undervalued. So I think from a retail perspective, there's going to be a hoard of gold and silver over the next 2023, 2024 period. From, I think, hedging and certainly from a risk perspective. So, yeah, the safety as far as physical is really going to be magnified in 2023. Central banks are buying up big, so I'm sure consumers are as well.
All right, and just as far as data we are getting this week, I mean, there's not a lot of it given we are obviously heading into Christmas, but there is some coming out of the States, particularly with an eye on what's going on in the housing market there.
Yeah, well, exactly, Andrew. You know, the structural weakness, we understand what's going on as far as residential property sales, well down, cratering. The realtor sector's been absolutely crushed. And there it is, that US new home sales, the blue line there. When you look at that number, it's absolutely under some massive pain. So as far as valuations are concerned, the old story, assets depreciating in these times, everything we own and everything we need is inflating. So yeah, 2023 is going to be a very interesting point in time for the rent market and certainly for property.
And Pete, just to round it off, I mean, you did touch on oil there a little earlier, given we've seen it down to $79 a barrel at the moment.
Yeah.
So what are the drivers going forward from this point, do you think?
Andrew, I'm still keeping an eye on naturally consumption over this period. China waking up and re-engaging. So from a consumption angle there, probably increased, needs and wants over the rest of December and certainly January and February. So there's that sign. If we don't see any geopolitical concerns, then I wouldn't be surprised crude to take a little bit further of a leg up from a demand picture, and keep an eye on Saudi Arabia joining the BRICS. And what happens there with currencies. And so I think 23 is going to be crucial for the energy market, with those big producers creating much angst for everyone, being Saudi Arabia, Russia, and the likes of China and India involved there from consumption.